What if America is not collapsing in the way people fear, but changing in a way most people still cannot see? What if the real danger is not a sudden crash, but a slow shift happening right under your feet while the headlines keep distracting you? If you like clear thinking over empty panic, tap, like, subscribe, and share this with the one person who always asks, what's really going on? Most people are asking the wrong question. They ask, is the United States finished? Is the empire over? Is the dollar dying? Is this the end? Those questions sound dramatic, but they are too simple. And when the question is too simple, the answer becomes useless. A country like the United States does not usually fall apart in one cinematic moment. It does not wake up one morning and simply stop being powerful. That is not how great powers weaken. They weaken in layers. They weaken through habits. They weaken through bargains that used to work, but no longer work the same way. And by the time the public finally feels it clearly, the shift has already been underway for years. So tonight, I want to reframe the entire conversation. Not around panic, not around ideology, not around the usual shouting match between left and right. I want to talk about power, money, trust, and the hidden deal that helped America dominate the world for generations. Because if you understand that deal, then a lot of confusing things start making sense at once. The debt makes more sense. The tension around trade makes more sense. The obsession with sanctions makes more sense. The rush toward digital money makes more sense. Even the strange feeling that the system still looks strong on the surface, while something deeper feels less stable, starts to make sense. Here's the core idea. America's greatest advantage was never just its military. It was never just Silicon Valley. It was never just Wall Street. It was not even just the size of its economy. Those things mattered. But beneath all of them was something even bigger. The world needed the dollar. Not wanted. Needed. Needed. It for trade. Needed it for reserves. Needed it for safety. Needed it for the plumbing of the global financial system. And when the whole world needs your currency, you live by a different set of rules. You can borrow more easily. You can spend more freely. You can run deficits that would crush another country. You can export your problems for longer than anyone thinks possible. That special advantage has a name in economics. People call it an exorbitant privilege. It sounds technical, but the meaning is simple. America could do things financially that other countries could never get away with, because the dollar sat at the center of the world. If you are the country that issues the currency everyone else must hold, then your debt is not just your debt. It becomes part of everyone else's system too. And that gave the United States room to live larger, spend bigger, and postpone hard choices longer than any normal nation could. For decades, this looked like strength. And in many ways, it was strength. The United States built alliances, financed wars, rescued markets, expanded government promises, and absorbed shock after shock. It could do this because the world kept trusting the dollar. That trust was not magic. It came from real institutions, deep capital markets, strong property rights, a huge economy, military reach, political influence, a legal system that, despite all its flaws, still looked more reliable than the alternatives. So foreign governments bought treasuries, investors rushed into dollar assets. During crises, central banks stacked dollars in reserve vaults, and the machine kept running. But here's the part nobody likes to say clearly. A privilege can become a trap, especially when the people enjoying it start acting as if it will last forever. That is where the United States is now. The old advantage has not disappeared. The dollar is still dominant. America is still the largest strategic force in the system. But the privilege is not as overwhelming as it used to be. And the cost structure built on top of that privilege has become enormous. That is why so many people feel something is wrong, even when the system is not visibly broken. They are sensing a transition, not a clean collapse, a transition. Let's start with the obvious number everybody throws around, the debt. America's total public debt is now approaching $40 trillion. That number is so large it barely feels real. People say it fast, almost like a slogan, but very few stop to think about what it means. A debt figure that big is not just a budget issue. It changes how a government behaves. It changes how flexible a country is. It changes what future choices remain open. And more important, it changes how much time a government can buy before reality becomes harder to avoid. Now, many people hear that and think the story is simple. Politicians spent too much. The parties refused discipline. Voters wanted benefits without sacrifice. Case closed, that is. Part of the story, yes, but only part. Because lots of countries overspend. Lots of political systems make promises they cannot fully support. And what made America different was that it could keep doing it at a scale others could not. Not because math stopped applying, but because the world was helping finance the math. That is the hidden layer. And here is why that matters now. When borrowing was cheaper and trust was broader, the burden of debt felt distant. It felt manageable. It felt abstract. But as interest costs rise, the debt stops being a background number and starts becoming an active force. According to the Congressional Budget Office, federal interest costs have moved above $1 trillion a year and are expected to keep rising over the coming decade. Think about that. Over $1 trillion, not to build a bridge, not to train a worker, not to upgrade a port, not to invent a new technology, just to service obligations that already exist. That is like a household spending more and more of its income just covering the interest on old credit cards. Even if the household still looks rich from the outside, its freedom is shrinking. That is what people mean when they say a great power becomes less agile. Not weaker in a dramatic Hollywood way, weaker in its ability to choose, weaker in its ability to respond, weaker in its ability to absorb shocks without printing more, borrowing more, or inflating more. And once a country reaches that stage, every new crisis becomes more expensive than the last. Every war is harder to finance. Every recession is more politically painful. Every promise costs more to maintain. The problem is not just the size of the debt. The problem is that the entire model assumed the privilege underneath it would always stay deep enough to support it. Now look at the second layer. The world's reserve behavior is changing, slowly but clearly. The dollar still makes up the largest share of global foreign exchange reserves by far. That matters. You should not underestimate it. But the share is much lower than it was decades ago. The IMF's reserve data still shows the dollar at the center, yet well below the levels it once held when its dominance looked almost untouchable. That does not mean the dollar is finished. It means the world is becoming more willing to diversify. And diversification is not a headline event. It is a slow vote, a quiet one, but still a vote. Quick pause. If this is helping you see the bigger picture, leave a like, subscribe for calm analysis, and send this video to someone who thinks debt is just a boring number. This is where many commentators make a mistake. They imagine de-dollarization as a loud revolution. As if one morning, China, Russia, or some alliance suddenly announces a new world currency and the dollar just falls off a cliff. That is not how these systems usually shift. Reserve systems do not move like a social media trend. They move like glaciers. Slowly, then all at once in the public imagination. The real process is more subtle. Some trade gets settled outside the dollar. Some central banks buy a bit less in treasuries. Some governments increase gold holdings. Some regional payment systems become more important. Few energy deals happen in non-dollar terms. None of those changes by itself ends anything. But taken together, they tell you the monopoly feeling is fading. And that matters, because America's financial lifestyle was built in a world where the monopoly feeling was stronger. If this is the kind of analysis you want more of, press like, subscribe before you forget, and share this with one person who still thinks reserve currencies never change. There is another important detail here. The dollar's reserve share can look stable for periods of time, even when deeper preferences are shifting. Why? Because exchange rates and market prices can temporarily support the headline number. The IMF itself has pointed out that valuation effects can shape how the reserve picture looks from quarter to quarter. In plain English, sometimes the statistics look calmer than the underlying trend really is. So if you only watch the headline share and ignore the structural direction, you can miss what is changing beneath it. And where are some of those reserves going? Not just into other currencies. That is the point many people miss. Central banks have also been buying gold aggressively. Why gold? Because gold carries no promise from another government. It has no election cycle, no sanction risk in the same way. No central bank in another capital can freeze it with a policy announcement. The European Central Bank has noted that gold's share in official reserves rose sharply, helped by price gains and by a desire for resilience during periods of geopolitical risk. That matters psychologically as much as financially. When central banks prefer more exposure to gold, they are not saying the world ends tomorrow. They are saying trust is not as effortless as it once was. Now let's address the strongest counterargument, because this is where serious thinking begins. The counterargument is powerful. It says, yes, America has problems. Yes, the debt is heavy. Yes, other countries want options. But where exactly is the replacement? The euro has political limits. China's currency is not fully open. Many emerging market currencies are too small or too volatile. And global trade still runs through systems built around dollar clearing. So even if people complain about the dollar, they still come back to it when things get scary. That is true. Very true. Which is why anyone claiming the dollar is about to vanish is overselling the case. But notice the hidden assumption inside that argument. It assumes the dollar can only weaken if one single rival currency fully replaces it. That is too narrow. Because the next challenge to dollar dominance may not be one king replacing another king. It may be a messier world where no one fully takes the throne, but more countries find ways to avoid needing permission from the old throne. That is a different kind of transition, and in some ways, it is more realistic. Think of the financial system like a transportation map. For a long time, the dollar was not just the biggest city, it was also the main bridge, the main airport, the main train hub, and the safest highway. If you wanted to move goods, capital, or trust across the world, you usually passed through that center. Now imagine new side roads, new rail lines, and new regional hubs slowly being built. Maybe none of them is as large as the center. Maybe none of them replaces it entirely. But if enough traffic begins using them, the center loses something important. Not existence, optionality. And once people have options, the old center cannot behave the same way forever. This helps explain why sanctions have become such a double-edged tool. In the short term, sanctions prove American power. They show the reach of the system. They remind the world who still controls key nodes. But over the longer term, they also create incentives for other states to reduce dependence on those same nodes. If your entire trade life can be damaged by another country's financial machinery, then sooner or later you will try to build backup routes. Not because you hate the system, because you fear exposure. This is one reason alternative payment systems, bilateral settlements, and regional financial links matter more now than they did 20 years ago. They are not always efficient. They are not always elegant, but they are politically valuable. And politics, over time, reshapes finance. That is why this story is deeper than debt. Debt is visible. The bargain under the debt is the real issue. America borrowed from a world that believed dollar centrality was almost permanent. Now it is borrowing in a world that still trusts the dollar more than the alternatives, but not with the same innocence. That difference sounds small. It is not. It changes how quickly interest costs can bite. It changes how carefully Washington must manage credibility. And it changes how fragile the future becomes when political dysfunction keeps getting exported through the same system. Let's make this more personal. What does it mean for ordinary people if this transition continues? It does not mean there will be one day when ATMs stop working and the flag comes down. It does not mean supermarkets suddenly go empty across the entire country. This is not that kind of story. The more realistic risk is slower and, in some ways, more unsettling. It means purchasing power becomes harder to protect. It means asset bubbles become more tempting because policymakers hate pain. It means the government has stronger incentives to keep liquidity flowing, even when that creates future distortions. It means households feel trapped between inflation, high living costs, expensive debt, and a financial system that seems to reward size more than prudence. That is how imperial strain often feels from the inside. Not like a movie explosion, more like a long squeeze. And then we arrive at the part almost nobody explains clearly enough. When states lose room, they usually do not respond by becoming modest. They respond by trying to regain control. This is where the future of money becomes so important. Because the real next battle may not be over whether the dollar remains number one in the old form. It may be over how money itself is redesigned in a more controlled age. Across the world, governments and central banks have been studying or testing forms of digital currency. Some of these projects are early, some are clumsy, some may fail. But the direction tells you something important. Authorities want more speed, more visibility, more efficiency, and in many cases more direct influence over financial flows. Now, let's be careful. It is easy to drift into fantasy here. Not every digital currency project is a dark plan. Not every new payment rail is tyranny in disguise. Some of it is genuine modernization, some of it is competition, some of it is simply the natural evolution of technology. But incentives matter, and a heavily indebted state facing slower growth, more geopolitical friction, and rising pressure on its financial model has a very rational reason to want tighter control over the pipes of money. If the old loose system becomes harder to manage, then more programmable systems start looking attractive. That does not prove how far governments will go, but it tells you why the temptation exists. Before we go further, do one small thing for the channel. Hit subscribe, tap like if this opened a new door in your mind, and share it with someone who still thinks money is only about numbers. This is why the phrase American collapse can actually hide more than it reveals. Collapse sounds sudden. Collapse sounds final. Collapse sounds like one clear event that everyone recognizes at the same time. History is usually less dramatic and more cruel than that. What often happens instead is a drawn-out renegotiation. The country keeps its symbols. It keeps much of its influence. It keeps impressive military power. It keeps elite universities, giant companies, major cultural reach. And yet, quietly, the economic terms underneath its dominance become less favorable. It must pay more to maintain the same position. It must exert more pressure to get the same result. It must carry more debt to create the same effect. That is not theatrical collapse. That is strategic erosion. Save this video, hit subscribe, leave a like if it challenged your assumptions, and pass it on to someone who watches markets but not the deeper system behind them. Rome did not wake up one day and realize it was no longer Rome. Britain did not hold a press conference and announce that the center of gravity had moved. Transitions like this are confusing while they are happening. That is exactly why the public usually reads, "Then late." People look for one giant sign. But history often speaks in accumulation. A coin becomes less trusted. A borrowing cost rises. A trade route shifts. A reserve mix changes. A foreign government hedges its bets. A domestic political system becomes less capable of sacrifice. None of these looks decisive by itself. Together, they tell the story. And this brings us to the real tension at the center of America's future. Can the United States reform before the privilege fades too far? Can it rebuild fiscal seriousness without crushing growth? Can it restore trust in institutions that look increasingly tribal and exhausted? Can it lead a world that is more fragmented without abusing the very financial power that keeps others inside the system? These are difficult questions, harder than election slogans, harder than cable news arguments, harder than blaming one president or one party, because the roots go deeper than personalities. They sit in incentives, expectations, and a post-war order that no longer feels as natural as it once did. You can already see how trapped the politics are. Cut spending deeply, and millions revolt. Raise taxes sharply, and growth suffers while capital looks for escape. Print too aggressively, and inflation punishes the middle and working class. Do nothing, and interest keeps eating a larger share of the future. Every path now carries pain. That is what late-stage privilege looks like, not freedom from consequences. A narrowing menu of consequences. If you've made it this far, you're exactly why this channel exists. So subscribe, drop a like, and share this video with one friend who cares more about truth than headlines. And notice something else. America's internal division is not separate from this financial story. It is part of it. A reserve currency system depends not only on economic scale, but on confidence and institutional continuity. People around the world do not just buy numbers. They buy trust. They buy the belief that contracts will be honored, markets will function, and power transitions will not destroy the legal framework underneath the asset. When the political culture begins looking more chaotic, more vindictive, and more unable to make long-term decisions, the trust does not vanish overnight. But it starts requiring more maintenance. And in a world with more alternatives, even a small erosion in trust matters. This is one reason I think the most important story is not whether the dollar disappears. It is whether the dollar remains dominant on terms that are becoming steadily less favorable for the society underneath it. That is a huge difference. A country can remain central and still become more burdened. It can remain powerful and still become more brittle. It can remain rich and still leave ordinary people feeling poorer, more anxious, and less protected. That is why so many Americans feel a split between headline strength and lived reality. The system still projects power, but the internal cost of sustaining that power keeps rising. So what should serious people watch next? First, watch interest costs, not just the debt total. Interest costs tell you when the weight of the past begins eating the room needed for the future. Second, watch reserve behavior and central bank diversification. Not because one quarter will change the world, but because these are long-term signals of preference. Third, watch gold and non-dollar settlement experiments. Not as proof of immediate revolution, but as indicators that more countries want fallback options. Fourth, watch the politics of financial control. Watch how governments talk about digital payment systems, compliance, traceability, and monetary modernization. The words may sound technical. The incentives are not. They are about power in a more constrained age. And most of all, watch the gap between narrative and behavior. When leaders say the system is strong, ask what they are actually doing. Are they borrowing more because they believe growth will save them? Are they tightening rules because they fear instability? Are foreign reserve managers quietly diversifying while public speeches remain polite? Are households moving into hard assets because they no longer trust cash to hold its value? Behavior reveals reality faster than slogans do. Always. Here is my view. The United States is not on the edge of instant collapse. That phrase is too crude, too emotional, too lazy. But it is absolutely on the edge of something serious. It is on the edge of discovering what its power looks like when the world still needs America, but needs it a little less than before. It is on the edge of paying the bill for a model built during a more forgiving era. It is on the edge of learning that reserve currency privilege is strongest right before people start treating it as normal, permanent, and immune to misuse. That is when systems become careless. That is when costs pile up. That is when the future starts charging interest on the illusions of the past. And maybe that is the truth nobody wants to say. Plainly, the problem is not that America is weak. The problem is that it is still powerful enough to delay the consequences of its own habits. That is more dangerous, because delay creates denial, and denial creates scale. The larger the privilege, the longer a society can mistake postponement for stability. But postponement is not repair. Borrowing is not renewal. And financial dominance is not the same thing as civilizational health. A nation can command markets and still neglect its foundations. It can issue the world's reserve currency and still hollow out social trust. It can dominate military alliances and still lose the discipline that long-term strength requires. That is the contradiction at the heart of the American moment. The country is too strong to fail fast, but not strong enough to ignore structural drift forever. And that kind of tension can last much longer than people expect, until suddenly the price of maintaining the old order becomes impossible to hide. When that moment comes, most people will say the change happened all at once. It almost never does. It happens in slow data first, in budget lines, in reserve choices, in gold purchases, in settlement experiments, in rising interest burdens, in new controls, in the growing feeling that the system needs more force to produce less confidence. By the time the public gives the transition a name, the transition is already mature. That is how history likes to move. Quietly, then undeniably. So do not ask only whether America collapses. Ask whether the bargain that made America exceptional is being rewritten. Ask who benefits from keeping the public focused on surface drama while deeper structures shift. Ask what kind of society emerges when a country tries to preserve global financial power while its domestic room for error keeps shrinking. Ask what happens when trust becomes more expensive than debt. Those are the questions that matter. Those are the questions beneath the headlines, and those are the questions that will decide whether this era is remembered as decline, adjustment, or the beginning of something far more controlled than the world has yet admitted. If this video gave language to something you've been feeling but couldn't fully explain, subscribe now, leave a like, and share it with one thoughtful person before the next big headline tells the smaller story again, because the most dangerous turning points are not the ones announced with sirens. They are the ones that arrive disguised as normal. And when a superpower begins paying more and more just to remain the same, that is not just a financial problem. It is history tapping on the glass.